Hello guys, welcome to today's session in Quantsapp, and today I'll be providing you some expert insights to maximize your investment, right? But before that, if you're new to the video, you can go in the description, there is a link below with the help of which you can download and install the wealth application of Quantsapp. After successful registration, you will get some free tools there that will help in your investment journey. Also, you can also visit the video library. In the video library, we have multiple videos on multiple tools and strategies that you can use for maximizing your investment profit. Also, at any point of time, if you are having any kinds of doubts or query, so you can contact us. The number is given here, okay? And we will be there to sort your queries out. Right? So let's get back to today's topic, that is how you can maximize your profit. What are the tips and tricks? Okay. Now, first thing is that I have already told you, must be knowing that what are mutual funds, right? So now I'll not explain you again what are mutual funds, but now I'll tell you why mutual funds. Okay, why you should go with the mutual funds. Now, if you want to make profit out of the market, you can trade also, you can do the investment. Now in investment also there are various aspects, right? So let's see why only mutual fund. Okay, so first of all, it is very diversified investment option. It means if you are investing in a mutual fund, for example, this is a mutual fund, okay, so you will get so many diversification here. Why? Because there are so many, you can say, asset or stocks from various sectors or various categories, right? Now how it will help you? First of all, for example, if it is a IT sector, okay, and for some reason there is a negative impact in IT sector and IT sector is in loss, it is going in the bearish direction. But when you are trading with, when you are doing investment in mutual fund, so you have a diversification. It means you will get some stocks of IT also, you will get some stocks of FMCG also, there will be some stocks of health sector also, right? And many more, right? Now if at any point of time, if IT sector is going down, it is negatively impacted, but still your mutual fund portfolio will remain intact because of the diversification, right? Because you have so many other stocks here, right? So that is the reason, and that is why the diversification is very important, right? Now the second thing is professionally managed. Now when you do invest in mutual fund, okay, so it is being professionally managed. Now after being professionally managed, it can be of two types also. First of all, there can be active types, okay, and the second thing is of passive types, okay. So the fund manager, so basically the fund manager, they manages your portfolio of investment. It can be of two types, active and passive. The active ones, they handle your portfolio very actively. They will go for very active buy and selling, okay, according with the market. If market is in low, they will go for the buying position at that time, right? Similarly, they will research the market. There will be a team, so they will keep researching on the market, what are the various things that impact the market, okay, so that will be researched by them. Also they will research the stocks also, like which is the stocks that is creating good opportunities, that can have a good growth ratio in the near future. So they will keep researching on that, and that is how they will handle your portfolio. So they are the active one types who go with the aggressive approach, you can say, right? Now the second one is the passive one. Okay, so the passive one, basically I can tell you the passive ones are the one who go for the benchmark hugging. Okay, it means there are some stocks who are in the benchmark. Okay, now which are these stocks? So we can say these stocks, evergreen stocks, you can say, or we can say these are the Ritik stocks. Some people also say that, right? Now in this stock, they have a good name in the market. Okay, so it will not be very much impacted by some volatility or some event. Okay, so they will be in the growth overall, right? So that is what the passive fund manager do. They invest in this type of stocks, okay, like you can say the Nifty 50 stocks also. Okay, so they will replicate the performance of these kind of indexes of these kinds of stocks, right? They will not do some research, okay, they will not do actively buying and selling. So that is what the passive fund managers are for you, okay. But in both the cases, your mutual fund will be managed by the professionals, okay, so there will be less risk, right? Now ideal for long term growth. So if you are going with the mutual fund, okay, so in mutual fund your profit is recompounded, okay, your profit will be recompounded. In some scenarios it will be given to you as a payouts, as a dividend also, right? But many of the cases it will be recompounded, okay, and then if you are holding it for the longer period of time, so it will give you a very good growth opportunity and a good profit also, right? So that is one of the thing. Now accessible to all investors, okay, so it is accessible by all the investors. Either you are a student or you are a retiree person, it will be available for you, okay. You will have various opportunities and various benefits. For example, if you are going with the for example, you are a senior citizen person who is already retired, okay, from his position. Now you can go with the IDCW also, okay, so that will give you a regular payouts, if you are at a very early stage, so you can go with the growth mutual fund. Now in the growth mutual fund you can hold it for a longer time horizon, okay, so that will benefit you in the long time run, okay. So that is the thing, okay. So easily accessible to all the investors, right? And it is very easily available in various platforms. You can visit the Quantsapp wealth application also, you will get many opportunities there, okay. Now let's go ahead. So after why mutual fund, types of mutual fund. So we have equity funds. Equity funds, these are the stocks which these are the funds which includes, for example, stocks, right, indices. So it is included in the equity funds. Now equity funds, the returns are high, but the risk is high. Why? Because it depends on the market, okay. So if you are going with the equity funds, so there will be good profit, you can say, but as well as comes with a high risk, right? Now then the debt funds. So debt funds, we can include in debt funds, for example, the treasury bills, the bonds, you can say, okay, the commercial papers. So all these are included in debt funds, and they combine less profit but as well as less risk also, okay. Then we have the hybrid funds. In hybrid funds, we are a combination of debt and equity, you can say, right? So if I'll talk about the taxes, so in hybrid funds, you will pay the taxes as per your combination is. For example, if there is 58% of equity, so you will pay the taxes as per equity, okay. And if there is 52, for example, the maximum share you will be holding, either if it will be of equity or debt, right? So you will be paying your taxes accordingly, okay. So that is the hybrid. Hybrid means the combination of equity and debt funds, right? Then the index funds. Index funds are also, for example, there are so many index funds which are low in cost and market matching, okay. Market matching returns, what it means, for example, there is a Nifty 50 mutual index fund also, okay. So in that it will just replicate the market, okay, like the Nifty 50 is moving, so it will also be providing you growth as Nifty, okay, like your index, okay. So this is the thing. So these are the funds, you can trade in them. If you want high growth at a very short period of time also, so you can go with the equity funds. If you want a stable return and low risk, then you can go with the debt funds also. You can create your portfolio with the hybrid funds if you want to enjoy the profits of both, okay. And then we have the index fund also, in which you will go with the market indices, okay, and it will just replicate the market, okay, right? So this was it, right? Let's see what we have next. Now the tips for choosing mutual fund, how you can choose your mutual fund. So that is the most important part, okay. First of all, understand your risk appetite. If you want to gain more profit, okay, but you should be ready for taking risk as well, okay. Because in investment or either in trading, if you are taking more risk, so you should be, if you want more growth or more profit, then you should be able to take the more risk, okay. And I tell you, for example, if you are going with a mutual fund, so we have small caps, then we have mid caps, and then we have the large caps, right? So if your risk appetite is higher, you can say, so you can go with the small caps, that will give you a good growth with high risk, okay. If you want moderate risk with moderate profit, you can go with the mid caps also. And if you want to lower your risk with the minimum and profit, a little bit profit also, so you can go with the large cap also. Many of the fund manager, they choose 66% of their stocks from this large cap, because their risk is minimal in large cap. Okay, so that is the one of the thing. Now look at the fund performance and history. Now whenever you are going for the investment in mutual funds, so always look the fund manager performance and history, because that is the one of the thing that, you can say that is the mirror image of the fund manager or the fund or mutual fund also, like how it will do in the near future also. Okay, so always just check the performance and past history of that fund also. Check the expense ratio. This is one of the most important thing, expense ratio. Why? Because many people ask me question about the expense ratio or expense ratio also. Yeah, what is expense charges? Okay, so basically it depends, it vary on fund manager also, right? If your fund manager is very active, as I have told you in the starting, if they are active, keep on researching, keep buying and knowing, so they are making your portfolio well diversified, active, aggressive portfolio. Okay, so in that case they will charge you more, and that is included in the expense ratio, like the management fees, the buying and selling cost, the entry exit load, everything is combined in the expense ratio. Okay, so that is one of the thing that you have to take care of. Okay, the expense ratio. Diversify across funds type. Okay, so you should also be diversifying among funds type also. For example, right now you must have heard about the theme funds, right? Theme sectors. So you should be investing in different kinds of theme. For example, renewable energy, for example, health sector, manufacturing sector, so that you will enjoy the profit from the diversification. And also these are mega trend right now in the market. Okay, so that is one more tip. Like if you are going for the investment, so you can go with the mega trend also. Right, so there are 1 or 4 mega trends I have covered, so you can see my previous videos also on them. Okay, now consider the long term financial goals. So if you are planning to go for the mutual fund, so always consider the long term financial goals. Okay, because the profit, the maximum profit you will get, it will be in the long term. Okay, even if you are taking the low risk, even if you want to take the low risk and you want to create maximum growth, okay, so then there is only one method, that is the time period. Okay, just go with the mutual fund which is which is having low risk. Okay, and just invest in it for a very long time. It will provide you good growth. Okay, and just don't go for more profit in short time frame thinking. Okay, so if you want to make good profit, okay, so just give your mutual fund a little time, right? Okay, so that was the thing, that was the tips for you guys, how you can invest in good mutual fund. Okay, let's see the benefits of mutual fund investing. So I'll just cover this one also. So it is, as I have told you in the starting also, professionally managed. Okay, lower cost due to economies of scale. Okay, now flexibility and liquidity. Diversification reduces, easy to track and manage. Okay, so I have covered this one also. Flexibility and liquidity, yeah, in flexibility and liquidity is maximum in investment also, because right now many people are interested, either they are in the lower age group or they are in the senior age group. ठीक है, तो सभी के सब यहाँ पे इन्वेस्ट कर रहे हैं, so you will get a very good liquidity you can say. और ज़्यादातर in passive ones, जो passive आपके fund manager होते हैं, they are very overcrowded you can say. ठीक है, काफ़ी ज़्यादा लोग वहाँ पे हैं, so you will get a good liquidity in that. Okay, then lower cost due to economics of scale. It means if you are going with the mutual fund, आप 500 रुपए में भी अपनी SIP कर सकते हो. ठीक है, सो 500 रुपए में भी, ठीक है. फॉर एग्जाम्पल इफ यू आर गोइंग फॉर द ट्रेडिंग, वहां पे आपको यू हैव टू पे अ गुड मार्जिन, right? But if you're if you're going for the investment, so you can even start with 500 rupees a month also, right? Like you can start your SIP also. Okay, so that is one of the thing. Easy to track and manage. So it is very easy to track and manage, and you don't have to give your time on a regular basis also, right? So this is one of the thing. Okay, so guys, I have covered the benefits of mutual fund, the tips of the mutual fund that you can use in your investment journey. Okay, and I hope कहीं ना कहीं से आप जो भी इन्वेस्टमेंट कर रहे हो, ये उसमें आपको थोड़ा सा एक पुश देगी, प्रॉफिट में भी और थोड़ा सा इंफॉर्मेशन में भी. ठीक है, सो आई होप अगर आप अपनी इन्वेस्टमेंट कर रहे हो तो ये नॉलेज आपके बिल्कुल कहीं ना कहीं काम आई होगी. थैंक यू सो मच सेशन को देखने के लिए. अगर पसंद आया होगा तो आप लाइक कर सकते हो, नीचे कमेंट कर सकते हो, और इफ यू आर न्यू इन द चैनल सो यू कैन ऑल्सो सब्सक्राइब इट. थैंक यू सो मच. दिस इज योर ट्रेनर अंकित सिंह रावत. हैव अ वेरी गुड डे.